Silver daily forecast, April 4th, FXEmpire.com. The silver markets fell during the Tuesday session as the Federal Reserve released their minutes from the last meeting. The minutes made no implicit mention of a new round of quantitative easing, and as a result, the dollar gained in general. This had people running for the exits in the commodity pits, and of course, the silver market wasn't any different. The 33 level that we had talked about yesterday was pierced at one point during the session. However, it did turn around and fall from there. Right about the highs was where we were once the Federal Reserve minutes came out, and it appeared less talk, less chance of quantitative easing came into the market, and commodities sold off in general as the dollar gained. The argument for the silver market to perform at these levels, though, as it does look like we are still stuck between the 31 and 33 levels, with of course 30 being supportive as well, just based upon its large round psychological numbers. But the argument for the market to continue to perform in this general area while gold falls does make sense if you think about it long enough. Silver, of course, has an industrial application, and if the Federal Reserve feels that the economy in the United States is strong enough to perhaps start to support itself, that means industrial production will more than likely increase. And if that's the case, then demand for silver will as well. It's not necessarily the precious metals component that would be pushing it, but rather the practical and industrial usage component. The overall trend is still up, so we, of course, prefer to buy. We don't look to sell. And in fact, a break lower could be traded, but it'd be a very short term trade, and perhaps a bounce around 31 would be interesting to go from the long side as well. Obviously, a daily close up above 33 and breaking the highs of the Tuesday session would be bullish as well. So it does look like we have some very straightforward areas to pay attention to in this chart, with the most obvious being 33. If we can get above that and above the pierce for the Tuesday session, then buying would be the way to go. If we break down, we expect support at 31 and 30 as well. So this market could actually be a little bit more buoyant than gold going forward, just because there's so much support in such a tight area.